Hello, everyone. Thank you for joining us today and welcome to this special, very special educational presentation where today I'd like to introduce probably the foundation behind all of my personal trading, and that is Pi. And I believe this is the next stage in your evolution as a trader, most specifically as me as your educator as well. So welcome. My name is Stephen Primo. I am the president and founder of Specialist Trading. And as I said, I'm really excited, super excited to be presenting this webinar today because we're finally getting able to talk about something that's taken me roughly over 5 years to put together with Pro Trader Strategies and with our developers and with our programmers. It's taken that long, not because it's so ultra sophisticated or because we couldn't figure out how to do it, more so because we had a number of delays. Remember, there was a pandemic that got into the way of us doing anything. There was also other courses and other indicators we wanted to teach our students. So finally, after all that, we were able to put this together, and we're really excited. Once again, it's taken over 5 years. And a lot of traders I know specifically, I've been trading for 46 years now. I've basically shared with you all of the different techniques and methods, and will continue to share with you ways in which to trade and apply these methods towards the market. But from time to time, people are always asking, even though it goes entirely against our philosophy of education, how I personally trade or what I look at, what market or how I, what system or strategy I use. And I can just tell you today that Pi is really at the foundation of how I trade. This is the closest to anything you'll ever see of how I actually trade. And I'm going to be sharing with you the basics of it in today's educational class. Now, before we begin, as always, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying Pi, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember, since we are an educational company, all examples are strictly for educational purposes only. Now, if you haven't done so already, please feel free to follow us on Twitter or X, whatever you'd like to call it. There's our handle right there, abbreviation for Specialist Trading. I post upwards of 5 to 6 different snapshots a day from signals our methods have generated to little bits of financial wisdom. So there's lots of free education on a daily basis. Please feel free to follow us on Twitter. Now, remember, this is first and foremost an educational presentation. Therefore, as a mentor, my goal is not to force feed you signals, not to tell you what I think the market's going to do. I've never done that. I'm not going to tell you what I think is the best stock or market to trade or what I think is going to happen in the next week. I know you go to other webinars and they do that, but that's not what an educator does. If someone is teaching you how to swim, they're not going to tell you exactly how you're going to be swimming in the pool. And someone is teaching you how to play golf. They're not going to tell you exactly how to play golf at a certain course. It's up to you to decide how to do that. It's the same way. It's no different with trading. As a mentor, I'm going to share with you and show you the things that have high levels of consistency. But ultimately, my goal is simply to teach you how to trade with the specialist edge. Now, this was the same edge that was taught to me, and what has sustained me now going on 46. In a couple of months, it'll be 47 years. Hopefully, I'll be able to do the same with you. Okay, we're going to be talking about, once again, what is at the core of all my personal trading. But I really want to start out by sharing with you my belief of the evolution of a trader. These are different stages that I can almost guarantee you that 90% of all traders, maybe even higher, 95, 99% of all traders have gone through at one time or another. I know I have, and most of my students have. But let's just get a quick refresher course and see the evolution of trading, how it's brought you here, okay? Now, the very first stage is what we call the honeymoon stage, okay? I'm sure you all remember this. This is where you first start to learn about trading from friends, family members, the internet, even TV infomercials. Because at this point, you really have never heard about trading. You've never been interested. You weren't involved in that when you were growing up. And it's never really crossed your mind. But for some reason, it's starting to get very popular. And this is where you hear a lot more and more about trading. So let's say your friend down the street or someone you know for a long time is telling you, wow, you've got to get involved in this. This is really interesting. I think you'd like it. Or maybe you've looked on the internet, you've looked online, you've seen a lot of different stories on TikTok or on YouTube about how you can really do well trading. Maybe you and your significant other start to think, maybe let's go at this together. We can be a team and we can maybe make some extra money for ourselves. This seems like a fun project to do together. And then lastly, maybe you've even seen it on TV, right? An infomercial that tells you how easy it is to take these classes and to really be successful at trading. So it gets up your interest a little bit in it. You start to worry about that. Well, maybe I'm missing the boat. So the reason is because you're listening to a lot of get rich quick stories, and you're starting to worry, wow, maybe I've missed it because all these other people are doing well. It appears that everyone is just making money, almost like they're handing out free money with trading, right? It's just so simple. You can be on a beach and making free money while you're on vacation. And you start to say to yourself, wow, I don't want to miss all that. Think of what I could do with all that extra cash. So you read and learn everything. You want to be a little prudent about this. You don't just want to jump in. So you say, I'm going to do some research. I'm going to read and learn about everything so I can get my hands on every book, every periodical, anything I know about trading. So I'll read and I'll also attend webinars and seminars. All right. So you go to libraries or you buy a bunch of books online just so you fully understand and do the research of what trading is. Maybe you attend a seminar where you listen to someone talk about how they started out and how simple it is to be successful when you're trading. Lastly, you say, okay, I'm fully understanding this now. I've done the research and I'm going to decide what type of trader I'm going to be because I think I'm going to jump into this. And you decide you're either going to be a fundamentalist or a technician. Now, if you don't know what those are because you fall into those groups, let me just give you a refresher course. This is the king of fundamentalist trading. This is Warren Buffett. A fundamentalist makes their decisions off fundamental news or fundamental information. That means information that's coming from the actual company or the economy or interest rates or what the news is about unemployment or where the company is going, who the CEO is. So it's all fundamental, and that is worked into the price. These make the decision as to if a stock or market is going to go up or it's going to go down, the fundamental information. You can decide to either be a fundamentalist or a technician, which is on the opposite side of the coin. A technician doesn't look at really any fundamental news or looks at it sparingly. It really just looks at price. You look at a bunch of charts, you look at the numbers, support resistance, overbought, oversold. Those are things that tell you what the market or whatever you're trading is going to be doing, okay? It doesn't mean one's better than the other. They're just two different ways of looking at the same thing. So you decide to be either one, okay? So let's summarize stage one, or the honeymoon phase. Your goal is to make enough money so that A, you can either quit your job, B, just generate some extra monthly income, C, take that dream vacation, D, finally repair and fix up your home, or E, retire early. This is what everyone wants. These are all the hopes and dreams of stage one. And this is really what it's all about, right? And you feel pretty prudent because you've done the research. You didn't just jump in like everyone else and just say, well, I don't know what I'm doing. You've actually educated. What you think you've done is educate yourself. And you said, okay, I'm going to start trading. All right, that's the end of stage one. Now in your evolution as a trader, we bring you to stage two. This is where reality sets in. This is a difficult part of your evolution as a trader because at this time, you realize that trading is much more difficult than you originally thought it would be. After all those infomercials and all those things on TV said it looked simple, right? But you find out that it's very difficult. It takes a lot of time and a lot of effort. Now, let's say you have another job. Well, now you have like a second job just trying to control and manage your trading. It's really, taking a toll on you and all the wear and tear of trying to figure out how to do it correctly. Now, you begin to accumulate losses. And you start to realize that the statistics you had originally heard about may be actually true. So losing hurts. And it's the kind of hurt that you haven't had in a long time because you haven't done this before. You start to say to yourself, wow, this has taken a big toll emotionally, physically, as well as financially on me. All the money you set aside for trading is quickly going out the window. And you're saying to yourself, had I never started this, think how much money I would have had. Think how much I would have had on the side. I could have gone on vacation. I could have bought that extra piece of furniture I wanted, but now it's all gone. So it's really taken a toll, and you're starting to think about those statistics you've heard. If you're not aware what the statistics are, let me refresh you. You see this pie chart here. This is the percentage of traders who are profitable. Now, let's look at that large portion in red. This is the percentage of traders that will ultimately fail within the first year of trading. And when we say fail, we don't mean that you'll lose a little bit of money. Most likely you'll lose the majority of it or all of it. And in fact, this number has been reworked, and most people will say actually the number is greater than 80%, closer to 85%. Now that slice you see in blue is the percentage of traders that will just break even, anywhere from 10 to 15%. That's okay, you're not losing any money, but after all this hard work and emotional toll and ups and downs, you're not seeing anything for it, right? You're not seeing any results. Now that small little green little sliver you see there on the right, that's 5% of all the traders on the planet. Only 5% will consistently be profitable, okay? So this is starting to worry you, all right? Reality is set in and you're starting to get really depressed and frustrated. Now, trading losses start to cause friction with you, your friends, or your spouse, because it's really getting to you. You've never experienced losses like this before, especially with your hard-earned money. So your significant other or your spouse start to argue. Maybe you start to question what they're doing with all the money or what you're doing with it. Maybe you even start to hide your account statements from your significant other, right? And then you buy expensive trading equipment and systems that promise the world in order to make you successful. We've all done this. I know I did this when I first started trading. I spent tons of money on a brand new system, a system that was supposed to really just generate nothing but profits. Thousands and thousands of dollars I just gave away looking for the perfect system where basically it told me exactly what to do. It just spit out these orders, right? Or you spend tons of money on equipment telling you that, well, it's going to be so much quicker, so much faster. You'll have this edge and you'll have this system along with it, and there's no way you can fail. Well, that's almost similar to buying the most expensive pair of running shoes and thinking that it's going to turn you into a world-class sprinter. It just doesn't work. It doesn't matter how many charts or how many computers you have or how many screens you have. It's no further going to get you successful than just having one of them. And then lastly, you start to join all these chat rooms. You subscribe to blogs. You start to idolize and follow a trading guru because you think this is what's going to solve all your problems, right? You attend these chat rooms where you're looking at other traders talk about what they're doing and how successful they are, or following some guy in a trading room, and he's telling you that follow us in this live stock trading chat room and you'll get all the answers on a daily basis, right? Or in some type of blog, they have a 95% winning rate stock pick strategy. You can use it for day trading or other markets. This is going to solve all your problems. Or even lastly, you start to go to webinars or start to idolize some guy on TV, some guy who's supposedly a stock guru, right? Like this guy, supposedly. And you say to yourself, well, this guy has been trading for so long, 46, 47 years, he must have all the answers. So I'll idolize him because he's going to solve and take all my problems away. Well, here's a summary to stage 2. Whether you know it or not, what you're doing is you've decided to take yourself out of the game by walking away from any chances of success that you may have. You see, every time you think you're buying the perfect system, every time you think you're following some trading guru on a webinar, every time you purchase tons and tons of equipment or things that are supposed to speed up and make you have a better edge with trading, what you're basically saying to the markets is, I don't know what to do. I have no idea. I'm just losing money. So I'm giving away all my power to you to solve it for me, okay? And I've learned this because I did it myself when I first started trading. This is a recipe for disaster because you're walking away from any chance of success that you may have had and giving your power to someone or something else to do it for you. And that is really a losing mentality. Now, this brings us to stage 3, which is the sink or swim phase. Many of you may be in that right now, okay? What does this mean? Well, you start to realize that nothing, absolutely nothing you've been doing has made you any more consistent than you were when you first started trading. Therefore, you've come to a fork in the road with a big decision to make. One, you can either quit trading altogether, which is what 80 to 85% of most traders do, or 2, you can bite the bullet and decide to educate yourself and to take charge of your own trading. So this is the crossroad that I would venture to say that 80 to 95% of all traders come to. They come to this fork in the road where they have to make a decision. Unfortunately, most traders go to the left, meaning that they quit trading altogether. And they take the road on the left and say, this is it. It's too difficult for me. And there's nothing wrong with that, but that's your decision. You say, I can't do this anymore. And you quit entirely. And when you talk about it years later, say, I tried it. It just wasn't for me. I couldn't make any money. I lost. I followed some guy. He lost me a ton of money and it just wasn't worth it. That's okay. All right. You cut your losses, but you quit altogether. Now, the road on the right is the one that few traders take. And that's the road where you start to do this. You stop relying on outside sources that tell you when, how, and what to trade. You quit all chat and trading rooms. You stop reading all the blogs. You stop focusing on faulty systems or news announcements and stop idolizing those so-called gurus. What you're doing is taking back your power. So you shred all those blogs that you were reading, all those reports that were supposed to make you successful. You throw them away and say, you know what? I'm getting rid of all this noise. I'm going to start with a blank slate. Okay? I'm just going to focus on what's in front of me. And that's when you decide to make your own trading decisions based on what the market is telling you, not an outside source. You're not going to listen to these outside sources like trading gurus or like systematic trading or like the earnings or like the jobless numbers. You're just going to focus on what the market is telling you. Now, you start off and you feel free. Now, this is not guaranteeing you that you're going to be successful, but at least you feel free and you're back at the core of where you were when you first started. You're only focusing on the market in front of you. Now, going through all of these stages, you have the summary of stage 3, which is education is the key to becoming a successful trader. It's all about educating yourself. As you can see here, you have to walk through that door with educating yourself. Now, education doesn't mean that you can't go to webinars and you can't read books and you can't listen to news, but it means that you don't rely on them. It means that you don't attach yourself to them so that you feel, well, they're supposed to give me all the answers. Those are just stepping stones for your success. And once you start to release these things and become unattached to them, you start to see that, wow, gosh, I'm starting to get little bits of success. And you realize that success is all about 1 step forward, 2 steps back. It's baby steps. It's not about hitting these huge home runs, which may happen every once in a while, but that's not what success is. Success is these small steps which lead to longevity. Not just having a good year, but maybe having a good month. Maybe having a good decade, and then maybe having a couple of good decades. That's what really success is. So, going through these first 3 stages, all of them have led you to exactly where you are right now. All of these experiences have led you to what we're going to be talking about, and that's pi. This is the next stage in your evolution as a trader. So I know a lot of you have heard me speak about pi before, just sparingly. I really haven't gotten into pi because I wanted to wait to actually have a class and to give a webinar. This is the very first webinar we've ever done about pi. So I've spoken about it very sparingly or very briefly, but let's start off at what pi is. And the best way to describe what pi is actually to tell you what pi isn't. Firstly, pi is not an indicator. I know a lot of you may think, hey, well, isn't it something based off of some support and resistance, or when the moving averages cross over, or when this certain tools generate a signal? No, it's not an indicator at all. And pi is not a system or a strategy. In other words, pi does not come with a set of rules for entry, for exit, for stop placement, for money management. No, those are systematic or strategy type methods. Pi is none of those things. Pi is not involved with AI or artificial intelligence. In other words, pi doesn't look back and research tons and tons of data and then spit out a buy or sell signal for you. It doesn't do that. It doesn't do all the hard work. Once again, that's doing the work for you again, and you're taking yourself out of the game with AI. So this has nothing to do with artificial intelligence. And lastly, pi does not care. Absolutely does not care how you trade. I mean, think of it. Pi doesn't care if you're a fundamentalist or a technician. It doesn't care if you're a short-term trader or a long-term investor. It doesn't care if you trade crypto or currency pairs. It doesn't care if you like to go long or short. It makes no difference. Pi does not care if your strategy, your system is based on earnings reports or if it's based on the tides of the ocean or astrology. Pi does not care at all. Think of the freedom you have now. You can trade anything, whatever you like with Pi. All right. So the concept behind Pi lies in the fact that virtually everything in the world produces patterns. Everything. Okay? Now, a lot of times we say to ourselves, okay, well, I kind of have an understanding of that, but it's hard for me to really visually see that. Well, often it's because of where we are. But if we take a different viewpoint, it's easier to see these patterns, not only psychologically, not only in our trading, but also around the world. In fact, let's look at these views right here, these snapshots. Here's an aerial view of leaves. Look at the pattern there in these leaves and how they are in this picture. If we look at the same picture of boats or canoes that are docked in the water, look at the pattern they are creating that's very similar to the leaves you just saw. It's because we have a different perspective. We're looking from a different angle. Same thing can happen if we look at this aerial view of beach umbrellas and the lounge chairs on the beach. This is an actual shot of chairs organized on a beach. Look at the pattern that they are making. It's no different from a freighter in the ocean. You see two patterns here, not only the colored patterns from above of the actual cargo, but look at the pattern here on the side with the shadow. It almost looks like a skyline of a city. This is an aerial view of geography. Somewhere in the world, you would never see these patterns at all if you are just on the surface. But once you look from a different perspective, you start to see these patterns formulate. Here are a number of ships, cargo ships parked at port. If you were once again at the dock, you would just see a bunch of ships just staring at you. But once you look at a different perspective, you see the patterns that are created. And you can also see something as simple as a car doing donuts in the desert. At the surface view, it wouldn't look like anything, just looked like the car was driving around. But once you look at a different perspective, you see the beautiful, unique patterns that are being made simply by the car driving. It's no different from a boat in the middle of the ocean making circles. Look at the unique pattern right there. If we see cars parked in a parking lot, if we're on the surface, it just looks like a bunch of cars, right? But if we go and look at a different view, an aerial view, look at the unique pattern we have here of all the cars parked together. And we see this in nature as well. This is a herd of elk circling around somewhere within the world. And look at the unique circular pattern we have there. And this can be in humans just as well. Once you look at things from a different perspective, you see that there are patterns being generated everywhere and anywhere. They're all over the place. You just have to look at it from a different point of view. Okay, so now that we've established that everything in the world produces patterns, then that means that everything in the world can be charted. Everything. All that is required is proper data. So let's look at this chart, all right? Okay, can anyone tell me what stock this is, all right? This stock actually started doing pretty well. Looks like it made a double top right here and then started to go lower. It looked like it had a nice bounce, but that was actually a pullback to the upside. Good shorting opportunity because price went down and made new lows. Anyone familiar with this stock? Well, actually, it's not a stock. It's Chicago Daily Weather, okay? That was for this starting in the beginning of this year. How about this stock? Okay. I was doing well, but seemed to top out and had a major reversal right here at the top. And then that was it. It went straight down after that. Every time it tried to bounce, look what happened. Every time there was a bounce, straight down lower. Another bounce, straight down lower. All these pullbacks, right? Anyone know what stock this is? What time frame? Actually, not a stock at all. These are the California COVID cases in 2021, okay? See where COVID reached a peak right here, roughly in the very beginning of 2021, and started its decline. All right, how about this stock? Now, this is really volatile. Maybe this is an intraday trade, okay, intraday market, I should say. As you can see, going straight down, straight up, straight down. But look at, we have a non-confirmation right here. We didn't make a lower low, and that's where we bottom out and go right back up, right? Anyone know what stock this is? Maybe a day trading, maybe it's a Tesla intraday. Anyone know? Well, actually, this is the Dodgers wins and losses for 2023. Every time they had a win, it was an up market or up bar. Every time they had a loss, it was a down bar. So you see, I've shown you things that have nothing to do with the market. Everything can be charted. So now that we've come to the realization that everything in the world can be charted, then everything in the world can be traded. Everything. Okay? Let's go back and look at those charts we just looked at. All right? Here's Chicago daily weather. Now, how could we have traded the weather? How could we have known the weather in advance? We can't know the weather in advance, but you can have an idea of the trend. All right, so let's look at a simple moving average crossover. All right, we apply a short term in blue and a longer term moving average. And when the short term crosses above the longer term moving average, well, that's telling you that the trend is going up right here. And look what happened after that. The weather started to go up. Now, when the short term moving average crosses below the longer term, as it did right here, well, that's telling us that the weather or the temperature should be going down. And look what happened after that. Even though we had a big bounce right here, we never crossed back above and we made lower lows. Simple, right? Just a very simple trading 101 method that could have helped you determine the trend of the temperature of the weather in Chicago. All right. How about the California COVID cases in 2021? All right. How could we have known that somewhere up here we were going to top out and that the COVID cases were actually going to start to subdue and go lower and decline? Well, let's apply one of the tools we have on the PTS Primo Charting Platform. You've heard me talk about it before. The best short-term trending tool I've ever used, that's the PET-D. All right. So let's apply it. It changes the color of the bars. And remember, we're not looking at a stock. We are not looking at a market or a currency pair or a commodity. These are California COVID cases in 2021. Now, one of the simplest ways to apply pi is when you see three colored bars in succession is telling you that most likely there is a trend change. Now, the majority of bars here in the beginning were all green, so the trend was up. But right at this time here, what did we see? This was our first instance of three red bars. So the PET-D is so sensitive, it was telling us that most likely the trend is down. The PET-D doesn't care what this is. PET-D doesn't know if these are COVID cases. It just knows it's a chart. Remember, you can chart and trade anything. It doesn't care what it is. That's what pi is. It doesn't care. And then look what happened after that. That was your signal. You could have known that, well, it looks like COVID is going to start to drop off in California. Or how about the Dodgers, the win-losses in 2023, last year, okay? Well, you can use any one of our strategies and just trade them on a game-by-game basis. You could have applied any one of our methods to these bars because, once again, the methods don't know if it's based on earnings or if it's based on crypto. It just knows that it's a chart. And each one of these would have represented a signal to buy or sell. Now, you could have taken each individual one or taken the long-term approach and rid them for a long term, okay? It doesn't matter. All right, let's play a game. This will better refresh you for that concept of patterns and of trading. And let's assume that I'm flipping a coin, okay? This is a chart of a random coin flip that I did yesterday. And it's roughly about 100 flips that I did. And I charted them. Every time the coin landed on heads, I gave it the bar an up day. And every day that we landed on, or I should say every time that the coin landed on tails, it was a down day, okay, as you can see. So it formed a chart. Remember, you can form a chart based on anything. Everything has patterns. Now, let's say we're playing a game. And I said, before I formed this chart, I said to you, listen, I'm going to flip this coin 100 times. Every time it lands on heads, I will give you $1. Every time it lands on tails, you give me $1. Here's the good news. You can jump in anytime you'd like. All right. But I'm still going to flip it 100 times. All right. You can only take the first one and say thank you and let me continue on flipping, but you're going to be out. Or you can, do the entire 100 flips. It's up to you. Let's say you had done the entire 100 flips starting from here. Well, you would have lost $6. As we can see here at the bottom, that was our last flip. It ended at a negative $6. Okay. -6. So if you had stayed with the game for the entire 100 coin flip, roughly, you would have lost $6. But then you start to say to yourself, what if I had charted that the way I did right here? And you would have seen the patterns that there were some times when it was going up where I would have made money, and I should have taken advantage of those times and then stepped away when it was going against me making money and where I was losing money. So how could I have done that? Well, once you have, once again, patterns, you can chart. And once you chart something, you can trade it. Let's just add, once again, a simple 20-period moving average. And here's the way we would have used this. We would have said every time this chart of me just flipping a random coin closes above that 20-period moving average, then I'm going to say, okay, I'm in the game. I'll take that bet. Now, had we done it here on this first close right here, we would have been in the game this entire time until our first close below the 20-period moving average. And we would have made a nice $4. Not bad. We didn't do anything. And now that we are below the moving average, we're out altogether. Even though I'm still flipping the coins randomly, I'm out. Now, right here, we closed above. So I got back in, and guess what? It went right back down. So I lost $1. Okay, I'm still profitable. Now, right here, I'm still tracking your trades or tracking your coin flips, and now we close back up above. So at this point, I get back in, and I'm in betting with you until right here when we close below. And now I've just made a total of $3. Okay? And I bypassed all the rest of this because it was below the moving average. Do you see the difference? Or before, I would have lost $6. Now I made $7. Why? Because I charted the performance of me randomly flipping the coin, and I knew when to stay in and when to get out, because everything that's charted can be traded. All right, now that we've seen the power of patterns in charting, how can we apply this concept to our own trading? Well, this is what brings us to the next stage in your evolution as a trader. This is where we begin talking about pi. All right, the next stage in your evolution as a trader is the realization that you've been focusing on the wrong charts all along. Now, how can you be focusing on the wrong charts all along? We're all taught, okay, I'm going to be trading Tesla. I'm going to be trading IBM or Apple. I got to look at the chart, right? Even doesn't matter if I'm a long-term trader or short-term, makes no difference, right? Well, we're really looking at the wrong thing. We should be tracking our performance of what we're trading, not the actual stock. We shouldn't be caring at all about what the market is. We don't care about that chart. We care about our performance, all right? And remember, here's what I want you to say. This is the concept you have to grasp. Your performance is your strategy. Therefore, if you're trading your performance, similar to the coin flip, your strategy is your performance. I know it's a difficult concept to grasp, but think of it. We are only going to be focusing on your performance, what you've been making either on a trade-by-trade or daily basis. That's all we're interested in, just like the coin flip, because that's showing us what the model is. That's what we should be in and out of, our performance, not what the stock's doing or not what the crypto is doing. We don't care. So I'm going to show you right now how to apply the pi process. This is something you would be doing if you were a member of the pi course, and show you how simple this process is. All right, now on our platform, you see right here, we have the pi little icon. All you have to do is click that open, and you'll have a workspace here. Now, we've labeled this My Strategy, something we put together, and it's as simple as just logging in the date, and you can put in the open, high, low, close, but actually all you have to do is just really put in your profit or loss. So you put in the date for that day if you want, and put in how much you made or lost. And once you do that, it starts to formulate a chart, just like a stock. So we're not at all interested in whatever market we're trading. We're interested in this chart that we create. So yesterday, here's where I would have inputted the data for my strategy. Now I want to share with you an actual pie chart. This is an actual performance chart of a friend of mine who was actually trading. He was kind enough to share the results of his trading with us, and we formulated it into a pie chart. So let me show you what I mean here. Okay, this is the actual chart. And as you can see, the beginning of this trading period, this is just his performance, how well he did on this trade, how well he did on this one, how well he did on this one, and so forth. And you see over time that in the beginning, his trading was doing very well, phenomenally well, until we got to this point, we made a top, and it all started to go downhill. Slowly, it didn't crash, but slowly, surely. Now, this is, once again, just as if we're looking at a stock. But remember, this is not a market. This is your performance, or this individual's performance, okay? So if we had taken each and every one of the trades here, what you do on our pie chart is you would have a special cursor that logs everything. We have this outline here that tells you exactly what you're going to be accumulating, and that would be this. It gives you the statistics, all right? So if we had taken each and every trade, similar to that coin flip, where we were involved in every coin flip, here are the stats that would have happened, all right? It shows you, and this is one click away on our platform. It shows you the starting date and the number of the trade, and the ending date and the number of trade. The starting price was 0 because we started from the beginning with nothing. Our ending price was positive 14,929, and here was our total. That was it, our last price. Now, we also give you our stat window. The total number of trades was 79. The number of break-even trades was only 1. The number of winning trades was 24. The number of losing trades was 54, over half. Now, we also give you the win-loss ratio. Now, the win-loss, or sometimes it's called the success ratio. It's a trader's number of winning trades divided by the number of losing trades. So 1 is viewed as favorable. It indicates that the trader has more successful trades than unsuccessful trades. And anything below 1 is viewed negatively. It indicates that the trader has more unsuccessful trades than successful trades. So according to this win-loss ratio, this is a negative use of trading. But let's look at profit factor, because we also want to include this as well. So what exactly is profit factor? This is 1.28. Well, the profit factor is the gross profit divided by the gross loss for the entire trading period, okay? So a profit factor that's between, let's say, 1 and 1.5 means that the trading system is relatively profitable, right? A profit factor of 1.5 to 2 means that the trading system is highly profitable. And a profit factor above 2 means that the trading system is extremely profitable. So this is relatively profitable, all right? Now, these last are the worst drawdown and the total profit. These are the most important, because the worst drawdown means your peak to valley loss, your slump, the worst slump you had while you were trading. And this was close to $28,000, $27,897 to be exact. Now, the total profit we ended up when we stopped trading, just like when we stopped with the coin flip, was $14,929, nearly $15,000. Okay, so you still made money, but looking at the stats that we provide you with, remember, this is one click away. It's not something you have to figure out. It just comes with one click. Once you highlight the portion of the chart you're interested in, it automatically provides this for you. So you know where you stand with your performance level, okay? Now, could we improve that? Could Pi improve that? Remember, Pi doesn't care what it's based on, doesn't care. All it does is interact and impact your performance. And remember, this is a performance chart. This is not a chart of a particular tradable issue. This is the performance of what you have done trading. So let's go back to that chart again. And let's use, once again, Trading 101. Let's use something on our platform. We go to our indicator page right here, our indicator icon, and we use a simple moving average. Let's apply a 20-period simple moving average, as we have right here, all right? And once again, let's use that philosophy. This time, we'll be a little more conservative. Let's say if we close 3 times below, as we did right here, we will get out of our trading, okay? So if we close 3 consecutive closes in a row below, we are out altogether. And we're not going to trade anything until we have 3 closes above. Now, we had 1 close above, another close above, but then we went right back below. Remember, you have to have consecutive closes, okay? Now, in order to highlight this with Pi, we'd say, okay, so we would have exited here. So let's use our cursor and highlight the area that we would have only been trading. And that would have been right here. We look at the stat page. And now let's look at the difference, okay? Now remember, before we had a total of 79 trades. Now we only have 27. We had 0 breakout trades. But how about the number of winning trades? Before we had 9, now we have only 24. But losing trades goes down from 54 down to 18. Our win-loss ratio pretty much stays the same. It just goes up a fraction of a bit. But look at the profit factor. Remember, we stated that the profit factor, if it's above 2, means that the trading system is extremely profitable. Well, look what the profit factor is. It's 2.18. But most importantly, look at these two numbers. And we're trading everything, where we stayed in trading our system all the way till we quit. We had nearly 28,000 in drawdown. Look at the drawdown, went down to 6,300 roughly. All right, we decreased it tremendously. But more importantly, before, when we traded everything, just the same way when we were in the coin flip, we, instead of making $15,000, we're now up above $32,000. Okay, so we've stayed out of the market entirely for the last 2/3 of our trading, and on top of that, we've increased our wealth, our profit, and we've decreased the drawdown. Now, a lot of you are saying, well, yeah, but Steve, this is all, how do we know to get out here? Well, you would have gotten out, and while this is happening, you would continue, just like the coin flip, just like me continuing to coin flip, you would continue to trade with paper money, just as if you were actually trading and you would actually record it for that day. So in an instance, let's say on this day you decided to buy and you made a nice little profit. Well, you record that just as if you were trading, but you would know that that wasn't a real trade. You were just paper trading. And once you would have plotted it, take you maybe 5 seconds on Pi, you would have seen, well, we're still below. And after 3 days, you say, well, we're still below, so I'm not going to get in yet. You would wait until you plotted it and saw that you had 3 consecutive days, but it never happened. So look, Pi kept you out altogether. Is there a way we could have increased these results even better? All right, let's go back to the initial chart once again. And let's use another tool that you'll only find on a platform. That is the PET-D right here. Let's apply the PET-D and use that same concept where when we see consecutive bars of the same color, 3 consecutive bars, that's telling us either to get in or get out. Well, obviously we've been in this time, but right here is where we had 3 consecutive red bars. So once again, this is where we would be out of trading on this 3rd bar where it closed up on the day. Even though it was up tremendously, it was red. So we would have said to ourselves, well, listen, I'm no longer going to be trading with actual money. I'm only going to be paper trading from now on. That way I can continue to plot the data and see when I get 3 green bars in a row. Now here we had 1 green bar, but look at the next 2 bars. They were red. So I'm not getting in yet. Here we had 2 green bars. Okay, if we had 1 more green bar, I would have gotten back in. But no, the next bar was red. And so I never got back in. I was out entirely right here. So let's use our magic cursor and block the area that we're interested in. And then once we've done that, we click on the stats. And now let's look at the stats now. Where before we had roughly, I believe, with using the moving average, we had 27 trades. Now we only have 16 trades, okay? Now before we had 24 winners. Now we only have 5 winners. And before we had, I believe, not 54, 18 losers. Now we've gone down to 11. Let's look at the win-loss ratio. Still doing very poorly, roughly about 0.45. But look at the profit factor. Once again, we've now gone up to 2.5. So this is an extremely profitable method of trading. Lastly, our drawdown still stayed the same at negative 62.60, which is okay. But look at the profit. Now the profit now went up from 33,000 up to 35,000. So we gained an extra roughly $2,000 or $3,000 in profit. And all the time we were out of trading here. We were no longer involved in the markets. Okay. So you see, Pi is not tying up your money. You're once again in that coin flip where you're only involved in the gambling bet when it's going your way and you're out when it's going against you. And the only way you can do this is by tracking your performance, not by simply trading a stock and wondering, how come this is not working? Why isn't this working for me? So do you now see the power of Pi? This is where we talked about you've been focusing on the wrong charts. You've been looking at Tesla. You've been looking at GME. You've been looking at Apple. When, for all intents and purposes, you should only have been looking at your performance as related to those stocks. And then see how your performance is doing and then track that. That's the chart you should be trading. Now, what I've shown you today is just the tip of the iceberg. I mean, there are literally dozens more ways in which to apply pi with using any one of the tools we have on our platform already. Just as if you can apply them to a stock or to a market, you can apply all of these tools to your performance chart, to your workspace. This is just, once again, the tip of the iceberg of what I've shown you today by applying pi. All right, so let's look at these advantages. Once again, remember, pi does not care what strategy or market you trade because pi is not focusing on that. Pi doesn't care. It doesn't care if you're a fundamentalist. It doesn't care if you're a technician. It doesn't care. It just cares about the results, the performance results, because that's all that's important. That's the only thing you should be focusing on. Pi can enhance your trading results. Why? Because just like that coin flip, it will only keep you in when your performance is doing well and get you out when your performance is doing poorly. Therefore, it will change and enhance your trading results. Pi is simple and easy to apply. You see how simple it was right now? It took me maybe to put that chart together, maybe about 20 seconds just to click on, put in the data, and then to click on an indicator, and then to apply the pi stats. It's that simple. It's really easy, and you can do this whenever you have a trade or just for study. Pi can be used with all the studies on the PTS Primo Charting Platform. Think about it. If you have a performance chart, you can add strategy number 4 to that. Know when you want to trade it based on what the strategy is generating. Because remember, if you have a chart, you can trade it just the same way you would trade Apple, same way we would trade crypto. Okay? If you want to apply the PET-D, as you saw, you can apply the PET-D. If you'd like to apply the PSBI, the PTS-XT, all of our great, valuable trading tools can be used with pi because pi is just a chart. And lastly, pi can be applied to all data. It makes no difference. It can be the weather, it can be gas prices, weight loss, even sports. As long as you have the data, you can punch it in and create a chart, and then you can trade whatever that chart is. Pi opens up a world, something you've never seen before. Once again, I've really never talked about this because I never had the capability to really share with you because everything I had to do was by hand up until about 5 years ago. And this is where we started formulating the Pi workspaces on our platform. But I'm happy to say we've made it simple, clear, and concise, and very easy to apply. And it'll open up your worlds. And for once, you can finally say, wow, I'm a consistent trader. Why? Because I'm just tracking my performance. If my performance is great, well, then pi is going to keep me in, whatever I'm using to track it. If my performance is terrible, well, pi is going to keep me out. Now, I know a lot of you are saying, well, gosh, I can just do this at home. I can keep my own charts and do it, sure. But you won't have the PET-D. You won't have the PTS-XT. You won't have moving average lines. Why not become a student of the pi on the PTS Primo Charting Platform and have these all one click away? That's what we mean when we open up your world to all these different things. Remember, you have to grasp this concept. Your strategy is not about earnings, and your strategy should not be about overbought, oversold. Your strategy is your performance, and your performance is your strategy. Keep that in mind, and that's how you become consistent. It's time to take your piece of the pie. It's time to take charge of your own trading and turn it around. It's time to start off 2024 in the right direction. And for the very first time, you can start trading as close to as possible as the way I actually trade. I use pi. I've been using pi for decades now. And this is what has really sustained me going for all these years. All right, now we're going to have live classes coming up in the near future, a series of classes, because there's tons of information I want to share with you. It won't just be one class. It'll be a series of classes. We're also going to share with you different bonuses and different things included in the Pi course. We're also going to be sharing with you different ways in which you can enhance your own personal method. You can share them with me, and I'll show you ways in which you can do that. But for more information right now, this is just an introductory webinar. For more information, contact Pro Trader Strategies, okay? I would highly suggest giving them a call at area code 310-598-6677. They have trading consultants that would be happy to take any of your questions. We're happy to talk about establishing some type of price. We didn't really want to go into that right now because I just wanted to explain to you as an introductory webinar what pi is. Remember, you've only seen the tip of the iceberg today, so therefore there's a lot more information, a lot more things you could be doing with pi, okay? Now, I'm going to leave this information up here. If you have any questions, just go to your question and answer box or your chat box. I will be happy to answer any and every one of them. Someone's asking, what does PI stand for? PI stands for, doesn't stand for pi. Or first of all, let me just explain. I know a lot of people have thought that pi has something to do with Fibonacci or a pi number. Actually, it doesn't have anything to do with those. Pi stands for patterns in equity, okay? Because you're seeing patterns in your equity. That's all it is. So once you make a chart of your equity, you'll start to see those patterns come and you can start trading with them. So pi stands for patterns in equity. I thought it was a lot easier to name it pi than to say this is our patterns in equity course, okay? Somebody's saying that my calculation was wrong. I only made $6 as there was opposed to $1 loss. Oh, you're right. I forgot about that dollar loss. You're right. As opposed, still made 6 as opposed to losing 6. So it was a $12 switch there, okay? Good catch. Anything else? When will the course be? The course hasn't been decided yet because remember, this is our introductory Pi webinar. So we're going to decide that very quickly, okay? I'm curious about how you mathematically calculate the coin toss for charting. How did you assign a number value? Oh, very simple. Every time a heads came up, I gave it a mathematical value of 1. So the chart assumed that you opened at 0 or opened where the last bar close was and went up a point of 1. And every time you had a tails, it was a -1. And so just like a day being down, then the next bar would open where the previous bar closed and go down 1. And so that's how simple it is. And this once again explains the premise where you can see patterns in everything. You just have to have a different perspective. Now, if I just stood with you and I just flipped a coin 100 times, you know, our minds visually would be able to perceive just the same way we wouldn't be able to see those patterns that I showed you of all the pictures of the lounge chairs or the boats in the ocean or the car doing wheelies in the desert. You wouldn't have seen a pattern at all. But now that you're able to chart it, now you can see there is a pattern, okay? There are patterns being generated. And you can start to apply different techniques and methods to those patterns. Also, would Pi work if you don't trade every day or only part-time? Sure, it doesn't matter because, you know, all Pi is doing is making a chart. And Pi doesn't care how you trade, once again. It doesn't care if you trade once a month or if you trade once every hour. Okay. The only thing you need is data, though. In other words, if you trade once or twice a year, well, guess what? You're not going to have a lot of data up there to make a chart of. It's going to take you 10 years to start to see some type of patterns come. But here's the good news. Remember, I said we've only touched the tip of the iceberg. We have created ways on the Pi interface to give you more data. I'll show you in the course how exactly to do that. So we knew that a lot of traders were going to say, listen, I love this, but I just started trading. I don't have a lot of performance. I've only traded maybe once or twice. That's okay. We have ways to increase that data for you, okay? Can we input our own data? Yes, you can. That's the whole point. You are going to be inputting your own data. You're going to be, you're seeing on a daily basis, well, I made $500. You'll input that $500. The next day you made or lost 200, you'll input that. And you'll start to see a chart being generated, okay? Good questions. They sound very intelligent because sound by people who are interested. Remember, this is the closest thing as to how I actually trade because I intraday trade E-mini futures, okay? And with that, I usually get a lot of trades. So I can plot each and every one of those trades, which I do, or I can also have a chart of just my results at the end of the day. And sometimes I'll go days, maybe even a week without trading because I'm busy doing webinars or doing something else. Other times I'll have a lot of data. But either way, I use this. Now, currently, just once again, I don't want to give away too much information here before we start the course, but the way I chart my trades, it was currently keeping me out of the market up until a few days ago. And so I was out. And then I believe just 2 days ago, I started back in. And I've been profitable for the last 3 days. Why? Because my performance is in an uptrend. That's all I'm tracking. I don't care how I'm trading. My performance is in an uptrend, and that's all I'm caring. Once my performance starts to show signs of a downtrend, then I'm out. I'm not trading. And I could miss a full day or two, maybe a week of losses. Think how that could help you trade. Pi doesn't care what I'm trading. It doesn't care if I look at the E-mini. It doesn't care if I look at crypto. It just looks at my performance because my performance is showing the ebbs and flows. And so that's what keeps me in trading, and that's what keeps me out of trading. Pi is what has sustained me now for 47 years. And I haven't talked about it because we've never had the ability to really put it together. We've never had something available on the platform. That's why it's taken 5 years to make it simple. And we're always trying to improve it, make it better. But I'm really excited about this because this is the closest thing you'll see to how I actually trade. Okay. Remember, we're just in the infant stages of Pi in terms of actually teaching it. Therefore, we just want to give you this information. If you have questions about it, pricing or anything, contact Pro Trader Strategies. They have trading consultants manning the phones. They'll be happy to discuss it with you, give you more information, and tell you how simple it is to apply to your own personal trading. Okay. See if we have any more questions here. Which of your strategies do you use to trade your intraday ES? Well, I use a number of them. I use strategy 4. I use strategy 10. It doesn't matter. All that matters is my performance. Once again, the Pi doesn't care what you're using. I could be missing out on a strategy or a technique, and it's giving me even better performance. Now, just a quick way of which you can use for Pi. Here's a great thing. If you trade with a number of strategies, you can be in and out of those strategies at different times. Let's say I'm trading strategy A, which is an Apple strategy, let's just say. All right. Maybe it's doing very well. My performance, I don't care what Apple's doing. What my performance is doing well. And so I will continue trading that because Pi is keeping me in. But let's say strategy B is the E-mini one, and that one's doing terrible. Well, that's okay. I'm out of it. So I'm not trading that one. And then strategy C is my longer term, which is doing well on longer term. So I'm in that one as well. Now, let's say strategy A goes into a drawdown. So I'm out of that one because Pi says it's below my performance. But strategy B goes back up to performance level of being okay to trade. So now I trade that. You see how you have these ebbs and flows. That's the way trading should be. And I don't care what it is I'm trading. I don't care what time frame it is or what indicator I'm using. It's just my performance. That's all I'm trading. Remember, my performance is my strategy. My strategy is my performance. Okay. Now, I don't want to take any more of your Wednesday here. This was our introductory webinar. We'll be having more in the future. Remember, we will be having classes. We'll also be talking about special bonuses that are included within those courses as well, that we'll be giving you ways in which to start your journey with Pi, make it much easier. And we'll also be telling you about different discounts along the way. But please contact Pro Trader Strategies. Give them a call at 310-598-6677. They'd be happy to answer any more questions you have. Now, as we close here and take one last look at our disclaimer, thank you so much for attending. As I said, I'm super excited about this. So I just really hope you saw the power behind Pi and saw how much it can really help you. But in closing, I really hope that all of you become students of mine in the upcoming Pi courses, okay? Thank you so much for taking time out of your day. I wish you all the best of luck and hope to see you in class. Bye-bye.